How about now? Can everybody hear me? All right. Let me start this over real quick, and I appreciate everybody's patience. Again, welcome into our Life Markets Master Class. My name is Matt Alina, and I am the manager of the Life Markets team here at URL. And today we're going to be talking about debunking common life insurance myths. Think of today's training kind of like life insurance Snopes. It's that website where you can put in, maybe a theory, and then whether the Snopes will tell you whether it's true or not. So uh, we do these Life Markets Master Classes 2 times a month. We try to hit them on the second and fourth Tuesday of the month. Our upcoming webinar, our Life Markets Master Class, is going to be understanding the financial needs of widows. And then we're also going to be doing a webinar on the infinite banking system, how people use life insurance for their banking. Be your own banker. Some of us have been in this business a while. You've heard of that sales concept, and you want to learn more about that. We're going to explain that and how people can use life insurance policies for infinite banking. For those of you who are in the final expense area, we also do a final expense coaching call. We do that on the first Monday of the month, most of the time. And we're going to be talking about free lead generation. How do you generate leads using social media? We'll be bringing in an expert on that. So let's jump into today's training. And again, I appreciate everybody's patience as we are having some audio difficulties here to start off the training. So let's talk about debunking common life insurance myths. And what is a myth? It's really a symbolic narrative that often explains the natural phenomena, folklore. It is not necessarily fact based. If any of you going through high school, we all had to study Greek mythology, and it was basically just people's ideas of what made things tick, what made things work. It was a great way to tell stories. And sometimes these stories would lead to basically, for a lack of a better word, misunderstandings. And sometimes people hear these misunderstandings, these myths, and they take it as fact. So today we're going to be talking about uh, the different myths that surround life insurance, and we're going to show you what the actual facts are, what the truth really is. So the top 10 life insurance myths, and part of this kind of surrounds the 25 years that I've been in this business. And for many of you, where life insurance may not be your primary business language, you may also believe some of these myths, or these myths are these objections that clients or prospects are going to give you, and you're going to say okay, and you're just going to walk away kind of with your tail between your legs. And the real fact of the matter is there's the truth, and we're going to kind of unveil some of that in today's training. Of course, if you have any questions, you can always type those questions, and we'll get those questions answered as we go along. So look, we're going to be talking about when people say life insurance is too expensive, or people are going to say, I'm not going to be dying anytime soon. I'm young, I'm healthy. That's the best time to buy it, folks. Some people will say that I have my insurance through my employer. So my employer provided life insurance is enough. Another one that I hear quite a bit is stay-at-home parents don't need it. There couldn't be anything further from the truth there. Life insurance is only for people with dependents, with children, people relying on their children, relying on their paycheck, their income. Another one is I am uninsurable. We'll talk about that. Or it's a waste of money if I don't die. Well, I think we should know that there's a 100% chance of that. Number 8, I can invest my money better elsewhere. I hear that one quite a bit. I don't need it because I'm single. or benefit payouts are always taxable. So we're going to jump into this and talk about these different myths and what the actual facts are. So, myth number one, life insurance is too expensive. Somebody's going to tell you, I can't afford it. When the fact of the matter is, they don't even know how much it actually costs. Believe it or not, most people overestimate the cost. Actually, that number is 3 times the actual cost that is out there. And there are many, many affordable options available. And when you're doing this, and you've been doing this a long time, you will understand that you have to believe in the product. You have to believe in what you're selling. If you don't believe in life insurance and what it does, you're really not going to do a very good job of selling it. But if you believe in selling life insurance and you believe in the product, it's going to convey to the client. So understand that you'll be able to um, the consumers are going to overestimate it. You're going to be able to kind of, if you believe in it, people are going to sense that belief. If any of you have delivered a death claim to a surviving widow or the surviving family, you have you've been blessed with the ability to see what the industry come full circle. I've delivered a couple of death claims and helped process them, and you'll never forget that first one. And you also have the ability to see that you've sat down with a client, you've gone through the planning, and then several years down the road they pass away, and now you have the ability to see the work that you've done come full circle, where that planning that you did all those years ago, here is the check that is going to help keep that family going and help alleviate some financial crisis. So getting back to this, most consumers overestimate the cost of life insurance. So here is an example of some rates. This is for a $500,000 20-year term. For a 25-year-old, it's less than $1 a day, a little over $20 a month. For a female, a little over $17 a month. Obviously, you want to buy life insurance when you're young and you're healthy. These are just some prime examples of a preferred, not even super preferred rates for $500,000 20-year term. You can get these quotes on our website. We have a quote engine there. You plug in their information and you'll be able to compare all of the different rates that are available with all the different companies that are out there. To that point, some people, a 25-year-old or a 35-year-old, look, a 35-year-old male for $500,000 for 20 years, they can get uh, coverage for less than $25 a month. Most people are going to think, oh, that's going to cost somewhere in the ballpark of 60, 70, $80 a month. Keep in mind, the average consumer does not know the price of life insurance, and they overestimate the price by at least 3 times. Jumping into myth number two, I don't need life insurance if I'm young and healthy. The previous slides that we saw show that you want to buy life insurance when you're young and when you're when you're young and you're healthy. That's the best time to buy it. Lock in the rate and guarantee that insurability and lock in that rate for as long as possible. Because as we get older, health problems will develop as we get older. We're getting closer and closer to the end, folks, and that's just how life works. So get it while you're young and while you're healthy. Again, those previous slides show that when you're young, when you're healthy, the rates are significantly cheaper. So life insurance is cheaper. Life insurance is easier to obtain, and it's really the opportunity to lock in lower premiums. Lock in that insurability. Today you may be super preferred, tomorrow you may be a substandard risk, or maybe you'll need to get a guaranteed issue plan. So get the encourage people to get the life insurance coverage, the protection, lock in the rate while they're young and while they're healthy today. When you're talking to young, healthy people, then one of the main causes of death in young people are car accidents. If any of you are parents of teenagers or maybe you're empty nesters, you know when you gave the keys to your car to your son or your daughter, your biggest fear was that they would get into a car accident. And believe it or not, according to the CDC, 43% of young people die in car accidents by car or accidents. It's one of the leading causes of death in young people today. So life insurance covers that too. So when people are young, they think they're invincible. So if you think that, let's get life insurance now just in case. Let's jump into this myth. My employer provided life insurance is enough. If you work for a company or you have clients who work for companies that provide a life insurance policy as a part of their benefit, it's a very nice benefit. It's a benefit that people should definitely take advantage of. But there's a couple of limitations, a couple of things that people don't realize. Number one, most people don't stay in the same with the same company for their entire career. Sometimes that employer provided life insurance policy is not portable, which means when they leave that company or when they retire, they lose their insurance benefits, their life insurance benefits. Typically, a lot of the employer provided life insurance where it's just a benefit, a perk for working for that company. A lot of times those benefits are limited in coverage, maybe 2 to 3 times their annual income, their salary. And typically, that is not going to be enough to sustain a family. It's not enough to meet the financial needs. When you do an individual life insurance policy or when you propose an individual life insurance policy for your client, you have to understand and explain that this policy is going to follow them wherever they go, wherever they land. The policy that they're going to get is going to be, we can customize it. You're customizing the program to be able to meet the financial needs and the future financial needs of their family. So individual life insurance policy, it, an individual life insurance policy is going to get, you can customize it to provide the uh, right amount of coverage for the family. It follows them wherever they go, wherever they land, whether they're working or they're retired or in between jobs, they still have their life insurance coverage. It's portable. The employer provided life insurance, more often than not, is not portable and is very limited. Another one that I hear is that it's hard to get coverage or a stay at home parent doesn't need life insurance. And the fact of the matter is, stay at home parents provide services that if we had to pay for it out of pocket, we could not afford it. Think of that stay at home mom or that stay at home dad where they're providing childcare. I've talked to people, I have coworkers that have 2 kids in daycare and they're spending over $2,200 a month in daycare expenses. $2,200 a month for 2 children. That's a mortgage payment, if not 2 mortgage payments for some of us. Stay-at-home parents provide services too costly to replace. That stay-at-home parent, they're the ones that are also managing the household, making sure that the house is in functioning order, and um, and again, a service that is very costly to replace. And I put a quote in here for myself, other things that I take for granted. I've been fortunate that my wife, for most of my working years, has been able to be a stay at home mom. And the other things that my wife does. and that I take for granted. So when you're talking to somebody and they say that my wife or my husband, they don't work, they work, folks, and you can get life insurance. And you need to encourage the person to get life insurance, because if something happens to that stay-at-home parent, the surviving spouse, the one that is putting food on the table, they're going to be having to pick up the pieces and get some of these extra services and pay for services that they were getting essentially for free with their stay-at-home parent. Life insurance is for people with dependents. Another myth. Life insurance does a lot of different things. A lot of us think that it's just to help make sure that there's money there to replace income, uh, pay off the mortgage, things like that. And when you have a person that does not have um, dependents, whether it's a spouse, children, life insurance is really for anybody and everybody. Life insurance can leave a legacy. Life insurance can cover medical expenses. It can pay off debt. It can pay off funeral expenses. Somebody is on the hook for that person when they pass away. Maybe not so much some of the debts and things like that, but that person that doesn't have any children or doesn't have anybody depending on their paycheck per se, they may have nieces, nephews, brothers, sisters, somebody that is going to be preparing their funeral or having the responsibility to making those funeral arrangements. Life insurance can help cover that, so that whoever is going to be responsible for paying those funeral expenses, that they don't have to put it on a credit card, or they don't have to take out debt in order to pay for that person's funeral expenses. It can cover those medical expenses, or even leaving a legacy. They may have a particular uh, affiliation with a church, or with a school or another nonprofit. Life insurance can help leave money and leaving that legacy there as well. Another myth: I can't get life insurance because of my health. And the fact of the matter is that URL represents nearly 50 different life insurance companies, and there are policies available for nearly all health situations. We even have guaranteed issue plans. We like to have a large, robust portfolio of products because we realize that we're not trying to make the client fit the company. We're trying to make the company fit the client. So we don't want to have it where it's a square peg going into a round hole. So that's why we represent so many different companies, all the way up to guaranteed issue plans. When people have some health problems, sometimes it's not that they're not insurable. It If they have some significant health problems, it may be that they have to only settle for what they can get. And having a little bit of life insurance is better than having no life insurance at all. Life insurance is just a waste of money if I don't die. When I started in this business over 25 years ago, I came in through the underwriting area in that part of the business, working for an insurance carrier. And the one thing that they train when you're in underwriting is that there is 100% probability that a person is going to die. There are life insurance policies that can provide other values, so that you're not just talking about death. And when you're talking to somebody that's in their 20s, 30s, 40s, and you're proposing a term plan, let's face it, a term insurance policy is for if they die within that period of time. A permanent life insurance policy is a life insurance policy for when they die. But some people can't afford it, or they feel like it's a waste of money, or that they're not going to die because they feel like they're invincible. regardless of the other facts that we just provided out there. So there are some other bells and whistles that life insurance companies put out there. Return of premium. You can get a term policy for that 20, 30, 40-year old and say, okay, for 20 or 30 years, pay a little extra in this policy. After that 20 or 30 years, you're going to get all of that money back tax free. The other option is to say, you know what, hold on to the money, give me a reduced, paid up permanent policy. That's the other option. Another option is to take that money and put it into another single premium plan or put it somewhere else. But there's an exit strategy there. Life insurance policies provide cash values. Those cash values grow tax deferred. I'll reference that more in our upcoming webinar on the infinite banking system and how that works. But life insurance policies, again, have cash values when you're talking about universal life, index universal life, or whole life, where they can get their money or have that work as a savings vehicle. And a lot of life insurance policies today, whether it's term or permanent plans, a lot of them are baking living benefits into their plans. Living benefits like long-term care, where they can convert or change that death benefit into a supplement for long-term care expenses. Or if they come down with a critical, chronic, or terminal illness benefit, they can access their death benefit while they're still alive to help alleviate some of those expenses. They're still here. They haven't passed away, but they can use the life insurance policy for other events that may occur prior to passing away. Here's another myth. I can invest my money better elsewhere. I love hearing this one. And the fact of the matter is, life insurance is a perfect complement to sound investing. For any of my financial planners out there, money managers out there, life insurance is not an investment, so we're not competing against you, but it does complement what you're already doing in that arena, helping people prepare for their retirement as they're building their nest egg. Life insurance is not an investment. It's a supplement to it, a complement to sound investing. The other thing about life insurance is that life insurance is it can build cash value, tax deferred, but people can put money aside month after month. Let's say you proposed $100 a month premium with somebody and they're like, oh, I could put that $100 a month somewhere else. Okay, you can. But let's say you pass away. God forbid, you pass away in 6 months. You've put $100 a month for 6 months. You get $600 back, maybe a little bit of interest. That $100 a month into a life insurance policy might get you a million, or might, depending on the age of the client, it might get you 100,000, quarter of a million, a $500,000 of coverage or more. So life insurance is a complement to sound investing. And it doesn't matter when somebody passes away. The other thing too is that a lot of times investments, money, whether you're putting it into a money market, into a CD, other investments, that's tied up in probate when somebody passes away. It doesn't get paid out immediately upon a person's death, let alone taxes on that. Another life insurance myth: I'm single, I don't need life insurance. Single people still have financial obligations. They still have a mortgage payment or rent. Some of them, they are married to their business. Maybe they're business owners. They need life insurance to help protect that business, help keep that business going. Perhaps they're in that sandwich generation where they are taking care of aging parents, or maybe they don't have any, they're not taking care of any kids, but maybe they're taking care of aging parents. So their parents are relying on some of their income. Um, they may also have incurred some debt and they need to have a life insurance policy work as a collateral assignment for debt. So there are many reasons why somebody needs a life insurance policy. Again, again, it goes back to the what I said at the beginning. You have to believe in what you're selling. You have to believe in that what in what life insurance does. And when you deliver those death claims, when you deliver those payments to the beneficiary, you're blessed with the ability to see your work come full circle. Life insurance benefits are taxable. That's a myth. And let me get into that one here. Most of the time, in most cases, life insurance death benefits are not taxed and they avoid probate. Life insurance death benefits are not taxed in most cases. Why? Because life insurance premiums are typically paid with after tax money and it avoids probate. I have a success story that I'd like to share with everybody. This actually happened about 2 weeks ago. A broker contacted me. One of their clients had a policy with Mutual of Omaha. They had it for maybe about 4 or 5 years and they passed away. And Mutual of Omaha, they contacted Mutual of Omaha. Mutual of Omaha asked for a copy of the obituary. And from there, within 48 hours, that check was cut and sent to the client or to the beneficiary within 48 hours, tax free. The benefit was around like $30,000. And I know $30,000 is a drop in the bucket with a lot of these large insurance companies. But the fact of the matter is that $30,000 helped make a bad situation just a little bit better. Just a little bit better. And they didn't have to wait weeks, months to get their benefit. They got paid right away. So understand that myths can lead to misunderstandings. So I hope that this answers some of the questions, gave you some fuel. So when you hear that, those rebuttals, those objections from a client, that you can get back to them and have conversations with people and get back and say it and answer those misunderstandings with confidence. Have the belief that everyone, and I mean everybody that has a heartbeat needs life insurance. Doesn't matter if they're married, doesn't matter if they're single, doesn't matter if they don't have any children. That everybody needs life insurance. The Life Markets team and I, we are here to help you. So feel free to contact us at any time for quotes, marketing, support, and with life insurance, this is an opportunity for you to be able to grow professionally and to grow financially. Life insurance may not be your primary market, and that is okay. We'll walk alongside you and help you with this and provide you with the confidence to have the conversations with your clients. Everybody needs life insurance, and you should be the one to help them with that. So I hope everybody got some information from that. Make sure that you join us for our upcoming webinars or our upcoming master class webinars, uh, understanding the financial needs of widows and the infinite banking system explained. So sign up for that. If you do have questions, I'll answer those questions now. If you have any, you can type those questions and I will get those questions answered for you. Of course, you can always contact me direct at 717 216 8041. That's my direct line, 717 216 8041. A question was, will you send us this presentation in an email? I will do my best to do that. I know that we are recording this and we will be able to, within about, I don't know, maybe in about 3 or 4 hours, you'll be able to revisit this webinar as well. And um, you'll be able to see the recording. So I'll see what I can do there, but I appreciate that. Again, if anybody has any questions, please feel free to give me a call, 717 216 8041. Appreciate everybody's time today, and we appreciate your partnership as well. And we look forward to helping with your life insurance cases. Bye for now.